To support this channel, we really would value if you liked the video, if it was enjoyable or found any value in it, that you shared it across as many platforms as possible where it would be relevant for other people. And also, if you're on your journey for learning to trade better, that you click in the links below to receive your free mini series where we've recorded really tight, good quality content in a great setting with awesome video to give you a bit of a basing and a grounding in terms of how you can become a better trader. Those links all in the bottom of the YouTube description. We appreciate you doing that. It supports and sustains us and allows us to record more often. Thank you for your help. I appreciate it. Enjoy the video. Hey guys, how are you? Yeah, just a quick check-in on the crypto side again. I think this one's more about just doctrine and differences and why HVF method. In essence, I saw someone retweet Peter's post on Ethereum BTC. So he's regularly accurate and he's regularly right. So just to say every now and then occasion that I have a different opinion doesn't mean he's a fool, he's bad or he's wrong, or that I'm right and I'm not a fool or bad or wrong. It's just people having a look at something and seeing something different on occasion. And that doesn't mean that it's always the case. We can often be in concurrence, but it sometimes helps to highlight philosophies and doctrines. And this is where I feel HVF method really shows its great value. So this was Ethereum BTC. And Peter felt that there was some bottoming there. He's got moving averages. I utterly debunk moving averages. That's a very controversial opinion, but I treat it like you're driving around in a muddy field as hillbilly farmer Joe after the floods, and you've pulled a couple of a dead calf and a dead cow out of the river, the swollen river bank that was part of your herd, and you're in the muddy field pulling the carcasses away behind you, and these corpses are on a chain and are essentially slipping and slithering behind you in the mud. Seeing significance or coming to conclusions about the direction of where Jethro and Eliza Jane are going to end up in terms of how they're driving their 4x4 is actually not being determined by the muddy corpses that are being towed behind them through the muddy field. That is how I view moving averages. You know, you don't, hey, suddenly look up and look out the window and say, damn, I think those dead cows, they're following us, man. Moving averages are in essence tied by the chain or the tow rope of mathematics. Simple as that. You aren't going to suddenly jink left in the 4x4 unless Jethro jinks the steering left. And the subsequent move of the cattle to the left, it's going to lag, it's going to be late, and they will overrun and they'll swing out wide for a while and then they'll come back in line. One is the lead steer, as in steer, rather than steer, and the two are the dead steers out back, and they get dragged by the 4x4. The tail does not wag the dog. So that's my, in a simplest form, nothing of any great value is ever determined by me on moving averages. And if you want me to consider someone's technical analysis low key, generally, is when people start saying, oh, we've bounced off the moving average, we've done X off the moving average, because of that moving average, you can see this. If you have enough moving averages and you have price bars that actually cover quite wide ranges, they will be intercepting, turning close to, near to, or just through moving averages all the time. And you could go, you see it bounced off the moving average here, it bounced off the moving average there, it's bounced off the moving average there and there. You can see it's amazing, this moving average, and it's bounced off it there, and etc., etc. No great trades I've ever put on have been as a function of the moving average. And if you can't determine a trend, across different time frames without a moving average, then you're riding a bicycle still with the little trainer wheels on, and that's why you're going around the corners standing up at a slower speed than everybody else. Anyway, moving averages aside, other people will continue to use them because I think you've taught something from the beginning. It's kind of like a child taught certain rules of life very early on in life, and you never shake them because you were programmed early with them. That's my take. It's controversial, and so be it. So there will be people who'll disagree. What it would probably be saying is that there were, you know, higher highs, higher lows, a little bit of Dow 3, and then you stopped. You had a reasonable move up here. I would argue that the fractal that he's shown is a very small part of the chart, but he wanted to get the bottoming in there, I expect, and then he's drawn this. Now, to us, to him, it's probably an ascending triangle with a squeezing element. That's how I'd expect him to identify it as a traditional technical analyst. And to me, I would argue that it's steeply ascending HVF, which when you get on a smaller time frame, you'll be able to appoint. And one of the key values of HVF method is that we assess over many time frames across many directions across all markets. So first of all, if we're talking about Ethereum, let's pop over to Ethereum and have a look. And one of the key elements about this ascending triangle structure, so that in fairness to the analyst involved, it was October the 7th. I saw the retweet 2 days ago when I was back, and someone had just retweeted it. So we had a degree of benefit of further insight on that, which has to be declared. But I can tell you how and why you wouldn't have gone for this. So first of all, this particular structure, if you're doing your bigger time frame analysis, and this I have plenty of YouTubes on for anybody who thinks this is kind of like a hind inside benefit. We have done inverted HVF on Ethereum. There are many YouTubes saying it was in a downside move. So in a macro structure level, Ethereum was called for a downside move. We called 17,744, and you could have been short from 36s. And you had a traditional entry for us on the 33 levels. So I'll take that off. You can see our analysis, and you can see where the targets were. And what happens just after a target's made, we also have the 5 stages of a breakout that you'll learn in far greater detail when you trade with us. And that's that. Once you've performed to target, there is respite for the bearishness for a period. And we call this progress decay. That's why you close at the target. There's going to be some rallying and some price behavior that's going to take money away from you. You're going to stay longer in the trade, and you're going to have less P&L. So that means more holding cost, more opportunity cost foregone, and a reduced P&L. That is why we close at a target. Even though this has been self-fulfilling, confirming that the bearish view is correct, and we trade continuation. So at the end of a target, we get square at the target, but the view is we remain bearish, square with a bear bias. This is how you mentally frame for this. Excuse me for that. I was a bit dry, and that green smoothie arrived with a very kind courtesy of my good host. Anyway, so what you then have is we expect a bit of pushback rally, and that's exactly what you got. So that's part one of this. The macro time frame of this is that Ethereum is underperforming to Bitcoin, and has for a while, literally from 2018, and you should stay with continuation generally. Very pivotably, you've just made a key target here, and as a result, that's why you get a little bit of a pushback in there, but you don't get excited about a bull market now being here, because the fact that a target has been performed to just means you reset, get new potential structure, a bit more pushing, and you remain square for a while, but you hold an overt macro bear bias. So that's the first element. The second element was on the shorter time frame, in the area that was being identified by that tweet. And what we say on those situations is this was a steeply ascending structure. So the part that was being identified was over here. And was like that. So just to refresh you in terms of that, I've just done the correct draw to reflect that event. I think here it is down here, over there. So what I'm saying about this is you will learn from us also that when you get structures that are steeply ascending, in other words, there's been an immense amount of buying, particularly in an environment where you are square but with a macro bear bias, and you had a steep amount of money that really wants to get in long, that any subsequent break you get has a high probability of fizzling. So let's just say broadly we'd funnel across there. What ends up happening is you get the move you expect for a while, it gets stamped on, boom, quite heavily, and then it comes through your levels, invalidates, runs your stop, and starts fizzling off. And this is quite typical structure of what you get on ascending HVFs quite regularly. So there are exceptions for ascending HVFs where we're very keen to trade them, and those you'll learn in our advanced and intermediate of our HVF method. But that incurs within a certain structure and setup of other larger macro setups, such as inside a funnel of a super macro HVF. In that case, we expect overperformance rather than a fizzle. But the fizzles are very, very common because too much buying has occurred along the bottom. So a lot of that pressure that you have over here in the constriction. Remember, everyone else sees these as triangles and competing trend lines. HVF method understands this is a volatility-based event. In other words, this is a tightening. But if you do all the tightening from one side and too much gets done inside the pattern, you lose the compression that is to drive the breakout momentum. And that's why you get a fizzle. And in actual fact, we have a pattern that I never discuss typically in YouTube, and I don't over discuss, but it's kind of like it's a subset of a head and shoulders, although it's more unique. We call it the mosque and minaret, but in actual fact the doming that occurs, minarets are usually very, very sharp up and sharp down. You often get a Batman's profile out of them, and then you get a very large extensive convex lens doming out, and you regularly get roughly in the middle of your dome what I would call the moon sickle and emblem that stands at the top. And what typically happens is at some point here you'll get a little bit of a snapback up, but it's usually smaller than the left hand side, and then you roll over. The interesting thing about the mosque and minaret patterns is that for that, unlike head and shoulders, the minarets can be taller than the doming head. So it's very similar family to a head and shoulders, but these are structures and these are unique to HVF. And I've just given you a small overview. We have targeting for them and we know how they work. But essentially you're getting a period after an ascending, too much aggressive buying along the bottom here. You're getting too much aggressive buying, ascending, you get a pop and fizzle, and the net effect is convexity. We refer to this as convexity. So it's like a contact lens that is fallen on the floor facing up, and you start slipping down the hill before. And we've seen a much bigger version on this on XRP, when I was saying to you guys, get out of XRP, be short XRP against Bitcoin way up there, and XRP went down the whole bull run of Bitcoin going up, and XRP just getting little spikes and then fizzling 95% of them back. 95% of them was a big version of convexity. I mean, let's just take a second and remind you of this so that you can see these phenomenons occur quite regularly. And this is a little bit for your interest's sake, just taking a detour. Let's just go with any of them. We'll do Binance on a bigger time frame, and you will see and remember that I've also YouTubed immensely on this one, and that was it there. Again, the weekly is probably a bit bigger time frame. Let's go daily. Just kept coming down, kept coming down, and it had domed out in a very similar fashion. You can see it here, the part I'm highlighting. So you're getting that, again, that convexity after a spike like minaret. And on this side you didn't get any form really of minaret. You could argue you got a small one there and maybe a small one there, but again, all this doming out, it's just a big ass fizzle out that has gone on for most of this period since September, way back in 18. So that's a little bit of a sidebar that I'll just give you, so that these things, you can see these things do just often occur and across different time frames. So going back to the ETHBTC, if I show you our draw of how it was playing out, so that was our draw for target. For some reason I can't seem to get Bitfinex on it. That was, let's get it again. Where's Bitfinex? There it is. That's the draw I want. So watch out for ascending structures. They don't always perform. Steeply ascending structures. Another lesson to be learned. Even if it's early in a little move up, if it's an overtly bear environment with a macro bear, it can fizzle. This could just be a weak rally. People generally call trend changes too early. Generally, they call trend changes too early. The time frame that this was done in was not particularly large for the overall macro bear that we had. Simultaneous to, whilst this was being done, we were also looking at Bitcoin dominance. This is what I call the 360-degree analysis that everyone should be done. And prior to seeing this treat, we had already shown that there was a falling wedge on Bitcoin dominance, and that Bitcoin is probably going to reassert again now after easing. And we've had it before. I've shown it to you there before. What happened after that wedge? Bitcoin absolutely floored it against the rest of the alts. So in the midst of, if you're doing 360-degree analysis, in the midst of Bitcoin in a falling wedge where it did that last time, then wound up, gave us our HVF, we called the top, literally, I said 73%. I gave you that target, guys, and then said we could ease after that. You want to be biased Bitcoin. Then you could see we had quite a strong readjustment on dominance. And it ground and ground, but then it's got tighter and tighter in here. So this is precursor for further Bitcoin dominance. Why would you want to go the second biggest altcoin, or the second biggest token of all, and the biggest altcoin long against Bitcoin into a Bitcoin dominance falling wedge overall? Unless you're trying to steal pennies in front of a steamroller, and this is a 15-minute, 5-minute trade. So if you're doing 360-degree analysis, you should have your macro biases on dominance, total 2, the biggest of the alts, Bitcoin, and if you're doing all of these accurately, and you have you're doing them across the bigger time frames and then dropping down, it would not have been a worthwhile trade. If you understand that ascending pattern structures can fizzle, and that actually you've only just performed, and we're in a progress decay period where you're just having a rally against a performed downside target, I would argue all of those components would not have seen you. And that's why I, as I say, and I don't always differ, and lots of good work is being done by other analysts, and some of them have absolutely huge followings, that, you know, I will take the other side of that, because it's not the case. And in fact, we loomed. I told my guys the trade that we are going to do, and it was a short ETHUSD, and this is where we were at on Ethereum USD. We're in a falling wedge. It's quite a wedgy period. In other words, you guys have been battling along, waiting for Bitcoin to do something. Now you note this red, this is your non-bull market. You never made it out. The alts never got to be a bull market. That is a rally in a bear trend from a low. Please understand that. To be going long something that couldn't get out of 23.6% when Bitcoin did 61.8% means you are calling for some unheralded strength to come from somewhere, and that you're a bottom caller, a knife catcher, etc., etc., etc. The trade is continuation. If it's weak and shown weak, stay with weakness until it proves strength. Really, this is trading. It's that simple. It's that simple. You know, to get to 23.6, which is the beginning of the yellow fib zone, you would have needed Ethereum to trade $400. It put a toe over 360 for not more than a nanosecond, guys. Understand this. This is what frustrates me. And people say, well, you shouldn't do that. You're reflecting a guy in a bad light. I'm not. I'm not reflecting anyone in a bad light, and I don't get to go up by pushing someone else down. It does great work often and regularly. Other analysts do great work often and regularly. But the whole concept is people are not being frank about the fact that the alts are not in a bull market. They never had a bull market. This is not a bull market. This is a rally in a bear trend. Guess where you stand? That's how high you are with it. That's your low. And here's where you are today. You have 1/3. You've retained 1/3 of your move to your highest point. You've retained 1/3 of your move to the highest point. And that highest point never got you out of the bloodbath basement from your all-time high. So that is a crap move that wasn't 23.6%. And currently you're trading at 1/3 of what it gave you, and 1/3 of what it actually gave you was nothing more than a rally. It's really frustrating, and people sitting waiting there for the alt mine, they're just killing themselves. They're sitting there in the big alts hoping that it's their turn, as if it's like life is fair. It's giving everybody a cookie, and because you've waited real long, you just got to keep waiting. Your cookie is coming. No, it isn't. You're in the shit queue where you get kicks in the arse, and someone else is in the cookie queue and you're being fed cookies all day long. Get out of the shit queue and go queue for the cookies. You're no longer in the queue for cookies. You're in the ass kicking queue, and you get your ass kicked in the ass kicking queue, and you're sitting there waiting for cookies. The game's changed. There was a blow off bull market, and it was never a bull market again for these alts. There's a few notable exceptions. There might, like BNB and whatever the case. I'm talking broadly, and I'm specifically on the Ethereum USD chart. So our trade that we went for, just a small, keeping the sharpener. This is not one of the 4 to 7 a year big moves that we look to get right on the major moves. This is not a sustained setup, but just tactical to keep very small, keep your skills in for those that are hunting for a trade. And we discussed it. We did the loom, and it said ETHUSD short. And I've got the target. My premium guys have it. We have the grind line. I was expecting this line level to break. We were squeezing up against that, and it's broken. So you could have got in here in and around the 176s, depending when you were involved, or down by the 174s. We were discussing it during this period while it was here after this huge rejection at the key level of 180. 180 is a major level. I'm not going to take the time to show you why. Here, you are premium guys know 180 is a major level on Ethereum. Major. You just have to look left. Go and do your draw on it. That was a rejection that wasn't going to make 180. That was a lower rejection, and this wedge extremity is being, at some point, it can break out of this wedge. So this is not a forever trade. This is tactical, be quick, and take a nerve. So I'm not saying never does Ethereum get a bump coming. You're in a falling wedge. We've spoken about wedges. Most of the time, you would expect it to bump out. But first, it can fall out the low. So there's more. You're always too early to wedges, I've found. I'm always too early to wedges. They've always got another little run down. So if I try get in too soon. So if I show you the wedge on the bigger time frame, you will see this. So here we go, wedging down. Let's get a bigger view. Let's go daily. There's other unique patterns that I will not be discussing on this YouTube that we've got, that we're trading in here, that gave us a just-in-time entry and a stop loss. It's part of our intermediate course and program. You won't be able to ascertain them from this, but if I show you the wedge, look at the big gray lines outer side. This has probably got a chance of another visit for a marginally lower low, or a drift maybe even to the other side here, which could see you 130s. I'm not saying it will do that. This is not a high probability major trade. This is bleeding out. At some point it will have a move, but initially it looks like it can sell off on this, and that it's broken this grind line along the lows here that it was starting to cluster on in between in this wedge structure. So you know, that's where it is. There's a little bit of nip and tuck you can take. Probably I'd guess up to 130. I think you can just run a new low to the upper 130s. You might get a revisit and just find support before that, but I think there's a chance you can get to this lower end grind one more time, especially if Bitcoin now softens at some point, which we all view that at some point it has. So if any rallies that it has, we'll look for it to soften. If we just look at how it's done today, and we'll just refresh this just to get the last 24 hours. The key point is, as you can see, Ethereum has underperformed Bitcoin, even with Bitcoin coming off 2.9%, Ethereum has underperformed that. And so for me, that was that call for me is not a strong call. Wasn't a strong call. It's a short time frame. It lacked the understanding of a major target having been made, which if you don't do HVF draws and you don't have the history. So in other words, technical analysis is building up history of patterns that have previously performed that throw out key levels of significance that continue to remain significant for the future. If you just look in isolation on a small little fractal and a moving average and something that looks like it's no longer going down on margin lower lows, there's a lot of cross data analysis that you're missing, plus the ascending nature of it, plus the fact that it's overarching bear. I think you can you know, really make mistakes in that. All that said and done, it's yeah, this guy's got it right. Antric.org, 40-day on BTC DOM broke to upside yesterday. He saw my, I'm assuming, alt BTC pairs were made for shorting. This guy said battle of two giants. It's not a battle. I'm not picking a fight. He's regularly accurate on in a traditional technical analysis way. And then of course I've got yeah, that's pretty much it. This guy says I'm a scammer and I'm wrong, and I must do the opposite. So you must all be aware. And that's it. All good. So watch it out there. Remember to do your charts carefully, and remember your history. Have a macro bias through the time frames. We talk about multiple time frame analysis. You'll learn to do more of that in there. And as I said, just a small little sell-off, but it picks you up a few dollars, and I'm not sure it's over yet. I think it'll come off a little bit more, but you are squeezing, and it's going to be a boring, quiet market now. There's a lot of things in squeezes, and then it will be boring until suddenly it isn't. Until suddenly it isn't. We're still biasing for the short side on Bitcoin. So I'll include an update on Bitcoin, seeing as you got a 2.9% move. So when I forecast yesterday, or when I last did a YouTube, which wasn't that long ago, it was the first one in a while, it was that we would turn back down. You'll see that there. Yeah, and at some point, maybe we've made that point. It's going to go a little bit dull, and then I think things could get impulsive, and I think that could be worse for alts when that happens than it will for Bitcoin. So if Bitcoin goes down, alts will be falling further. If Bitcoin goes up strongly, alts will not be enjoying as much of the visit. So Bitcoin might still have another final flurry move in it. So so it might still have another final flurry move in it. One more time, but overall we have a structure and a pattern that we're expecting to take place, and we're not sure yet if it's absolutely reached its point where it's getting ready to spill, or whether there's another cycle in it. But yeah, be careful out there. My bias is to the short side. We have a very, very valid target. We have plenty of time, forget it, and there's a chance even for overperformance on that target. And that Ethereum could trade through. It's not beyond the realms of possibility. That Ethereum could trade to or through even. People have written it off because they've all said it's the end of the bear. This is the problem if you have end of the bear thinking. I saw this with oil. Guys said it'll never go lower than the subprime low. It could go through that low point on its previous low. It doesn't necessarily mean the alt bear market is over. It doesn't necessarily mean that at all. It's not beyond the realms of possibility. I'm not saying this is a high probability call. That's a bit messy. I'm not saying that's a high probability call. It is squeezing, it is going lower, a lot slower, and it is forming a wedge. So there's three versions of what goes on with the wedge. Longer run, I would expect the wedge to break to the upside. So that's the probability call. But you've got to remember, that's no great shakes. If it trades down somewhere to these levels and eventually has a pushback up somewhere here, we've done this before in this rally from the lows. But it didn't hang on to very much of it, and it came all the way back down. So alts are not the game for the long side at the moment, and they haven't been for ages. But people will keep on holding on. Look, I'm talking alts generally, and I'm showing you Ethereum. There are one or two. If you want to chase finding, diamonds on a beach somewhere, and you're going to filter every grain of sand, you might well find, who knows, a chain link for a short period, or a Binance coin, or whatever the case may be, that has done moderately well. I would say that's a fool's errand personally in terms of effort, and you're more likely to get it wrong, and it might work for a while and then suddenly go badly wrong. Kind of think of the EOS, which diverged for a short period and then suddenly. I don't think that's the smart game. I don't think that's a smart probability trader type player positioning. Anyway, so here's the thing I have to tell you. Get the mini series. It's in the links below. Watch it, start understanding. It'll be delivered every day. Tweet it out and share if you've enjoyed. Book a call if you really want to do this properly. There's one or two people that have not even done a course with me, that think that they can try to teach it. They're absolutely destroying HVF method. They're trying to put a tweet out or whatever. They are hopelessly wrong, and I haven't got the time to correct them, and you get what you pay for. There is no understanding like taking a full proper year to understand how to analyze charts, be in a community doing it all the time, and learn how to do it properly. And people that think, oh, but I've saved some money, you're nickel and diming on your front end, and you're bleeding tens and hundreds of thousands out on your back end in lost opportunities and in losses that you didn't need to take. And I've just given an example of how in our analysis that was not attractive. That's just to do it. And this is a well-established trader with unbelievable number of followers, and there's others, and he does a lot right. I am being critical of that call, but he does a lot right, and I've made bad calls, so he's not a bad guy. He hasn't become poor. He isn't trying to mislead anybody. He put something out. We've all put something out, maybe without maybe thinking about it too much. So it's really not about personalities or anything else. It's just about actually having a method that you apply, and consistently always applying it and never short-circuiting it, which must include multiple time frame analysis, other chart representations that are related to the idea that you are trading. So you've got to look at dominance if you're trading Bitcoin against an alt. You've got to look at total too if you're doing it. You've got to look at that alt itself. You've got to look at the bigger time frames of what's been happening with that alt so that you know your macro bias on it. You should be bear or square on Ethereum versus Bitcoin. That's the story. It's been that story for a long, long time. You should apply that. Why try be the first to call the new strength? Anyway, enough said. It's a long vid. Share it. get your mini series, and if you feel you're ready to learn more about what we do, book a call. All the best, guys, and catch you on the other side. It's going to be a bit dull, crypto, like I say. It's a very tactical little play. This is not a recommend, and don't rush in and go short now. It can base out, and at some point I am expecting the bias for Ethereum to have an up move, but we'll have to see whether that comes after Bitcoin rolls over to the downside or not. So is there a final sell-off period to come, or will the 6831 not happen? We might, who knows, we might be wrong. I just wouldn't say you want to call this bottoming right here inside that falling wedge structure. I wouldn't say you want to call that bottoming. For me, I would caution that there's a chance that you revisit this lower end here, and hence why I'd say rather don't be long. Be bare or square and wait for it to prove itself to you. Okay, cheers for now.